The Asian session is without any doubt my favorite session to day trade. Today I'll share with you how I do it and my 3 secrets for day trading the Asian session. What I've heard in. So this is something that I've been doing for the past few years. Back in 2016, I came across a strategy for the Asian session that I kind of modified, tweak it on my own, and then I started to day trade it in the evening when I was in Canada. Then I eventually started to travel in Asia and day traded that strategy every morning when I was waking up, taking some trades, very hands off but still day trading. And I kind of kept it as a side strategy that can just make me a bit more returns. Not something I do all the time every day full time, but when I have time to do it, I'll day trade this Asian session. Today we'll have a look at a few tweaks, a few things you can change to get better trades in this Asian session, and how to catch these moves in the market. Okay, so coming up here on the chart, the first thing I'm going to go through is the importance of this pre-market or pre-opening range in the Asian session. Now this is very key. This is the key to all my trading in the Asian session. Is this range that happens before the session starts. If you need a quick reminder, the Asian session starts at 8 a.m. Tokyo time, so 7 a.m. my time here in Thailand. And what I'll do is I'll look all the way to at 3 a.m. my time. So we're talking 4 hours before the session starts for this opening range. And I have this indicator I've quoted that kind of gives me the range very clear on the chart. But we see if we have a look at this, our range goes from all the way here, just before we open for this session, all the way to this is our low over here, right? Because we've been touching as low as here. You could argue the low is a bit lower. You could argue the low is over here. That's fine, not a big deal. But we have a pretty clear range here in this market. Now this gives us a good direction because if price stays in this range all day, we have pretty much no trade to take, right? Because it's going to go back and forth. It's not going to be very reliable. But if you have a breakout of this range, then we've got places to trade and we've got potential moves to the upside or downside that we can catch in this session. As an example, you got this trade I took yesterday on September 11, and this worked out quite well. We'll get into the strategy and how to do it in a second. But understand that if you are within the range, there's something you can do there. You just have to wait. If you are outside the range, there's some places to look for trades there. This is where that market range comes into play. Okay, my second secret here to day trade this Asian session correctly is to not chase the breakout. Now, if you are trading New York, London, you're very much used to chase a breakout. You can just see the price, select the breakout, you see a breakout, it's going to happen very quick. You got to jump in really fast. In the Asian session, it's quite different. Here's a perfect example of just that. So we are here in the Asian session once again. 8 a.m. here's the opening time, 7 a.m. my time. And we've got price at the low of a range, which seems like it's going to break out. Price starts to break out. We have a potential breakout signal here. And then price breaks out even more, goes in our favor, then comes back within the range a few times here to kind of step us out. So even if you're like a really clever trader and you want to go on the short here, and you think, okay, I'm going to go here when I clearly break the range, I'm going to go here short, put my stop loss above this breakout, then you get stopped out. Now that's the point here. If you chase breakout in the Asian session, you're pretty much going to be stopped out all the time. Then you might think, well, price comes back once again over here. We have this other candlestick making us a nice breakout. I'm going to short over here again. Boom, stepped out once again. Or at least you're going to go break even for a while. And actually, you probably stepped out, or the trade just not works out. Okay, so see, we have many breakouts. We had 1, 2, and 3 fake outs in this session just in a few minutes. So you got to be really careful about not trying to chase a breakout. Now, the way I do it in this Asian session is I wait for a breakout, then I wait for a quick pullback. And this pullback could be just one candlestick. It can be very short, but at least having a quick pullback gives us more confidence in the trade. We have price breaking the range. We have a small pullback. We have the sellers coming back in and bringing the price down more. Therefore, we have a trade. That's kind of the idea here. And it means that sometimes maybe I'll miss the move a little bit. But at least I know I have a high quality trade and there's good momentum in this market. And that just makes my whole day better. Here's what I mean by this. So we have an example here of a breakout. This candlestick over here is a breakout candlestick. We clearly break the range. Then, of course, we could go short here. That's fair. But I want to wait for that small pullback candlestick here. That one bullish candlestick showing us we don't make a new low. We actually pull back up a little bit. The buyers are trying to step in, push the price higher a little bit. And the sellers come back strong and they break what the buyers try to achieve. All right? So my entry will be placed just below this low over here. If it's untriggered, I'll just cancel the order. But in this case, it's actually triggered at the next candlestick. I'll put my entry over here, trigger there. Then I'll put this right here in the middle because I have a 50% retrace rule when you have a big candlestick like this in the breakout. And that gives us a fairly good trade. My second target will be roughly 2 to 1. I do take some partial profits in between, usually at 1 to 1. But you can see that trade here worked out quite well. All because we didn't try to get in on the first identification of a breakout. We waited for the pullback and we got in a little bit later on this move. Here's another example of that. We are right here. We had a breakout of the range over here, pretty clear breakout. And I'm going to try to go, and usually what people will try to go long here. Now this is a case where this actually will work out. But what I'll do myself is I'll wait instead of this. I'll wait for a candlestick that doesn't make a new high, or pullback candlestick. This one over here, it doesn't make a new high. You can see it's having the same high as before, not higher than the previous one. Therefore, I'll put my entry just above this high, then I'll get in the trade right here. So I have a sign that the buyers push the price higher. The sellers try to bring it down a little bit over here. Then the buyers push it higher. Sellers bring it down a little bit more. We didn't make a new high, but then the buyers took control again and went higher than the previous high we had before. So good place here to look for a bullish trade. I put my entry just above over here. The stop loss below the candlestick that break out the range, which is over here. And on this one, we target once again 2 to 1. You can see how that's very easily achievable. Now we could target more. Of course, I teach people to sometimes use more take profits and kind of multiple levels. But at least in the basic terms, this works out quite well. We avoid the fake outs. We get in on the breakout with good momentum. And that gives us a pretty solid edge in the market. Okay, so I've got one last tip here for you that I think can make a big difference. And I've not seen people talk about this anywhere online before. But I've seen this from my own experience in testing in the market, especially this Asian session, that it works very, very well. So I'm talking here about if you can anticipate the move from London, you can have really, really wide targets and really big profits in this session. This is going to work out for the moves that happen later in the session. So you see we have a few breakouts here. We have a breakout 1, breakout 2, breakout 3. These are all happening like within the first 2 hours of the session starts. As we go forward, we kind of have some choppiness and some wicks. And then we get that breakout. Now notice how this breakout here happens around always like noon or 2 p.m. It's always around the same time. We have this breakout that kind of anticipates the London session. Now if you can ride this trend, and we know it's late in the daytime, it's past noon, we have a good chance that the price is past noon or midnight, like 1 a.m. in Eastern time. We know we have a pretty good chance that this will continue for London. And that's because traders coming in for London, they see the trend, they want to jump on that trend, they want to ride the trend, and they kind of push the price more in the direction of that trend. So if I'm taking that breakout, which we talked about before, and I enter right over here, put my stop loss around a 50% retrace, I can ride that trend for a while. I can almost ride that trend until I see price starting to shop out, go in the sideways market, kind of exit around that price. Here's another probably even better example. We've got breakout early in the session, so this is 9 a.m., 2 hours after the session starts. This is 10 a.m., so 3 hours after it starts. But then once we get past around noon, see noon is around here, so midnight or 1 a.m. Eastern time, then we get that breakout once again, right? Same principle. We want to go short on this, wait for a little pullback, which we kind of had over here. So we could go short on maybe around here or close this candlestick right here. And see how quick this is going to move, right? Stop loss above the break of the range. And now we can target, we have a huge move on this one, right? We can go all the way to 7, 8R on this one trade. All because then London starts to pick up around, I think, 2 p.m. or 3 p.m. my time. So 3 a.m. Eastern time. And then things start to shift from there and move. So if you see a trend happening, if you see the trend continuing in the market, then you have a good chance that things will work out in your favor. And this is why I kind of like to use the HMA, so the whole moving average, because I get a good idea of how strong the move is and whether it's likely to continue or not in the market. So here we have a good example where when it's red, price will continue in their favor. And when it turns green, it could be just a pullback or it could be a reversal completely of that move. If I'm in a trade, I'll try to move my stop loss to break even when I see this green curve here changing, and I'll just protect my trade more. If I see it turning back to red, then I can hold it for longer, right? And that's kind of how it works out here. So we could have gotten out right over here around this level, which gives us a 8.05 to 1 reward to risk, right? So see how we take this Asian session, we anticipate for London, and then once London hit a few hours before, we can get in on that trend, we can ride it more, and catch a really good breakout / trend continuation here in this market. Alright, so I hope these tips were useful for you. Hope you got some value out of this video as always. Leave me your thoughts below in the comment section. I would love to hear what you think. Any tips for London, or if you also trade the Asian session, let me know what you think and how you do it. I'm curious to hear your thoughts and your perspective on this. Make sure you subscribe if you haven't done yet. I post videos like this 3 times a week, and I'll catch you back here in the next video pretty soon. Ciao.